afternoon, everybody. Thank you for joining us. The noonday gun has just gone off here in our Cape Town studio, where we are based, and it signals the start of our weekly webinar. My name is Neil Peterson. I'm the founder, and the next guest panelist is Greg Stockton. So we'll come back to you, Sophie. Don't you worry. I know you're passionate about this game like I am as well. So Greg has over 2 decades of international real estate experience with wealth management, business development. He's now a global residential UK property expert, and he makes the UK property market accessible for international investors and delivers well-researched UK investment property to the very best international partners. So Greg, welcome. And you want to also briefly introduce yourself to the audience? Thank you.
Neil, thanks for that introduction. I think that's quite hard for me to beat, in all fairness. You've pretty much said it all. But you're right, Global Residential, we're a leading property investment company. We have a proven track record in developing a kind of diverse and exciting range of real estate projects. And we work with some big international financial advisory firms and property companies like Leo to provide them with quality real estate opportunities for their clients. So yeah, thank you for the invite today. I look forward to talking a little bit more about the projects that we have and how we can help.
Absolute pleasure. Great actually having you on board there. But I want to get to Greg, because now, Greg, you're actually dealing with a lot of clients all around the world, including South Africa. And I know you are an expert, particularly on the actual locations of where to invest and how to invest. So maybe just give us a little bit of background, as to what you're doing, who you're helping out, sort of worldwide, and how you can start helping out South Africans getting into the UK property market.
Yeah, thanks, Neil. It's a great question. I think to allude to Sophie's point, there's many people that do want to get their finances overseas, and UK property is always a good staple asset to have in the portfolio. But you're right, it's like, okay, well, I want to buy in the UK, where do I buy? And a lot of time we get asked, I want to buy in London, and I always respond with why, and they say, well, it's the only place that I know. And so I think, first of all, it's really important to give that sort of education around, where you should be buying in the UK. As an investment-led company, we tend to look at different key reasons to why an investor should choose a location. So first of all, obviously, price point's incredibly important. Not everyone's a multi-millionaire. And obviously we have to accommodate from an entry-level property right the way through to that high end. So obviously looking at price points is key. And looking obviously at the rental yields and where can we get good rental yields. At the moment, most people know interest rates and mortgages have gone up. So if you are going to take lending, you need to make sure that your property is going to generate you enough yield to cover those mortgage payments. So that's really important. And thirdly, is there any regeneration going on in that specific area? And the reason that's incredibly important is because as an investor, yes, you want to keep your wealth safe, but you also want to grow it as well, right? You want to know if you're buying a £200,000 apartment, in maybe 5 or 10 years, you can sell that for 250 or 300. And whenever you're investing into a city or a town when there's lots of regeneration, i.e. there's lots of government money going in, local council money going in to develop roads, commercial, residential, then it's always a key indicator that that's a good place to buy. So as an investment-led company, all of our projects are positioned in areas which tick those boxes. Some are off plan, some are completed, depending on what the clients want. And essentially, yeah, we're looking for that growth and that rental yield.
Okay, great. I think good positioning there. A little bit later, I'm going to ask you to delve more into the specific areas, and what's actually going on in the UK property market, because I think it's so important just to get a little bit of understanding on that. But great intro on that. Back to Sophie. So Greg, I'm going to come to you. So Greg, if you can maybe just elaborate what is actually happening in the UK property market, because you've got a good understanding. You touched on the London, you touched on, in the north. Where are the sort of the hot spots or recommended areas in the UK that you would recommend South African investors can get involved in, and why?
Perfect. Yeah, I mean, as I mentioned before, Neil, we get a lot of, I guess, initial inquiries into London due to it being the only place that people know. Certainly from an investor-led perspective, if people are looking for our advice, we do tend to steer away from London, which I know that might sound quite odd for somebody that only knows that is the sort of main attraction for the UK. But From a rental yield perspective, it's quite difficult to, sort of break through that 4% barrier, which again, you want to make sure that, you are kind of north of 5.5 if possible. And again, from a regeneration perspective, yes, there are lots of regeneration projects going on around London. However, from a price point perspective, we do feel there's better value elsewhere. We're extremely bullish on Manchester. That's probably our second requested city, mainly from Manchester United fans and Manchester City fans, forgive them. But it is our most requested city, and for obvious reasons, there's 80% of the FTSE 100 companies now are based in Manchester, and that's growing every single year, which is fantastic. You have, 5 major universities based in Manchester as well. So we have a lot of clients who are looking further down the field for education planning, get on the property ladder now for their children. And you actually have what is considered actually quite a small city. So there's this big push from the Manchester City Council to develop those city limits, and therefore you've got a lot of regeneration going on as well. So we're very, very bullish on Manchester. It's definitely our favourite city to invest into. But then from an entry level perspective, we have a fantastic project in Halifax, which is another city which is going through regeneration as well. You get a lot of value, very high yield from that. And then if we're looking at maybe something where a client wants completed and tenanted stock, so maybe not off plan, we do try and look for those commuter belt cities, possibly into London, where you can still get some value. So very bullish on Manchester, but we also have those satellite cities as well.
Okay, excellent. In this country, Greg, I want to come back to you because let's drill down a little bit further into those properties. What kind of property am I going to get? What kind of pricing I'm going to pay? What kind of, what do we get for our money in Manchester and in these other areas that you are recommending where South African investors invest in? Maybe you can give us some, run a few numbers and the type of, whether it's flats or houses or townhouses or terraced houses or whatever it may be. What do we get, and what are the kind of price points that you're working with?
Okay, would you mind if I share my screen to do that? It's probably
No, not at all.
A little bit easier. Is that okay? Yeah, perfect. Okay. Can you see my screen there, Neil?
Yes,
is that okay?
Yes, perfect.
Okay.
Perfect. We can see it.
Yeah, so this just gives you one of the example of sort of an entry level project of ours. So this is based in Halifax, where again we looked at the sort of regeneration that had taken place. So there's been about 200 million plus pound already sort of ploughed into the city to improve that residential, that commercial, transportation links. And this is actually an old worsted mill, so it's from the 1800s. We're direct with developer on that to convert the whole mill into 58 apartments, a mixture of 1 bedrooms and 2 bedrooms. You'll see on the price point there, £117,000, which is the starting level for the apartments, up to around about £230,000, where there's 2 sort of semi-detached houses on there. So the average price point being around about 130, 140. The rental yield expectation of that is 8%. For a standard rental, so it's very high from a yield point of view. So yeah, you put that into rand terms, what's 117,000, 120,000 pounds today? I mean, it's the rand exchange rate moves quite quickly, but you're talking what two and a bit million rand. If you were cash buying it, but as Sophie's alluded to, there is lending available, so you'd probably aim to about half, sort of maybe 40% of that. And that is a very unique project because the payment plan is quite interesting. We can exchange on just 5%. So in order for a client to secure a unit there, they'd be paying roughly around about £6,000 to £7,000 straight away. And then they can actually pay on a quarterly basis the rest of that deposit over the 18 months of that conversion, which makes it quite palatable for South Africans, especially if they're concerned about FX rates at the moment. People don't necessarily want to transfer 30, 40,000 in one go, but actually doing maybe 100, 150,000 every quarter might make sense for them. So we love this project. We've just started selling them, and the project should be ready in around about 18 months' time. For somebody that's maybe looking for more of a cash buy opportunity, We have a project in Wellingborough, which Sophie knows very well. I think her family member was the mayor or something, Sophie, or something strange like that. Anyway,
Hi, Sheriff.
this the High Sheriff, that's right. So this project sits about 55 minutes out of London, which again is, within that hour commuter belt. It's already fully completed, it's tenanted, so it has people living in there already. So straight away when a client's buying these units, they have that tenant already paying rental, already achieving about 5.7 to 7% rental yields. And again, the price point very conservative, 135 to 215,000 pound. And then lastly, sort of our hero project, which is, that Manchester development. The Manchester City Council have got a 15-year plan to regenerate the whole of the Victoria North, 7 suburbs, 15,000 homes. We've managed to take the tallest tower of 3 within that first suburb, which is Victoria Riverside, completes in Q3 2025. The developer's a listed developer. They've been on a stock exchange for 47 years. But the payment structure on this is 10% this year, 10% next year, and the rest on completion. But those deposits are fully protected and insured by the developer as well. This is going to be a monster project. It's the biggest redevelopment zone in the north of England at the moment. And just to put the price into context, that 350 is for a 2-bed. And if you compare that to Deansgate, which has already gone through a lot of regeneration in Manchester, 25 months ago, you could buy a 2-bed in Deansgate for 350. They're now worth 460,000 pounds, literally within 2 years. So the fact that you're getting a 2-bed here for 350, I think represents incredible value. And as that project delivers different suburbs and different properties, of course, you should see the increase in that capital stack as well. So yeah, we love all of these projects, but these are our sort of 3 core that we work with Sophie on. And of course, happy to take any questions from anybody on the Zoom.
No, absolutely. No, great. Thanks very much for that, Greg. I mean, it spells out a lot what's happening. I remember when I started off this magazine back in 2007, they were selling London apartments for about 150,000 pounds. I mean, it's unbelievable where the prices have shot up. And, just inflation is actually on the inside of the investor over here. So now we're looking at Manchester, 175, 200 plus 350. So, which just shows you the incredible, returns that you can get from a capital perspective on property.
Well, you think the target or the sort of estimation for Manchester is that it will do just the economy in Manchester, not property prices. The economy will grow 25% over the coming 5 to 10 years, which is huge. When you consider the average price point for a property in London is just over 800,000, and the average property price in Manchester is around about 300, just over 300. So it's half under value of London. Obviously it's never going to be a London, but it's definitely the UK's second largest city, and there's just so much going on there. It's an incredible investment area for sure.
Wonderful, no, incredible growth. And Greg, you're dealing with, you're not only dealing with South Africans, you're dealing with other investors in other countries and and also I think sometimes their currency is also a little bit under fire as well, because the pound sterling has been a really strong currency for a long period of time. And it gives an investor sort of this peace of mind. Chirag he plunged, he took the plunge. So certainly, what is it that you see with your investors out there in terms of, the actual investors who are buying the property over the years? Tell us about your happy clients.
Yeah, no, look, very, very, very happy clients. I think, when I first moved to South Africa in 2014 and we were having conversations around property, the same hurdle kept coming up. Right, I'm not going to transfer at 16. I'm going to wait till it gets back to 15. A year later, I'm not going to do it 18. I'll wait till it gets back to 17. The year later, I'm not going to do it 19. I'll wait. And that same pattern is just repeated and repeated. And I think the reality of the conversation that we have with clients, or we certainly should be having with clients, is let's forget the rand exchange rate for a second. Why are you doing this? Why are you even contemplating moving money overseas? And 9 times out of 10, it comes back to protecting my family wealth. You know, there's no one that's ever been able to convince me that the South Africa rand sterling isn't going in one direction, which is down. It's been repeating that pattern for 20 years, and it's going to continue to go down. So if you believe at some stage your children or your family will reside, live, need money overseas, this is not a case of an investment. This is an insurance policy. Your children are never going to turn around to you and go, I wish you hadn't transferred out at 24. They're going to go, thank you for transferring out. And I think you've got to be very careful of, you know, not to get necessarily paralyzed by the exchange rate, but actually just think about the long-term benefits of how you're protecting your wealth for your family. And I mean, I'm going to very quickly share, because I think it is a really important graph here for people that have been sitting and waiting. I mean, that just shows the last 20 years, sterling, dollars, and euro. And then just over the last 10 years, if you look at what UK property prices have done, they've gone up 64% in 10 years versus, you know, a 36% decline in sterling rand. So sitting around and waiting for exchange rates isn't making you any money. Making a decision, taking action, getting invested into a good asset, that's what makes you money. That's what protects your future wealth. And that's what people should be doing.
Okay, excellent. I think that's a good way of putting it there. Thanks for that, Greg. I want to so on a serious note here. So I think also coming through to back to Greg again. Greg, where are you seeing you know, the majority of interest, which area, which is like kind of like number one, which one people are saying, let's go, let's go, let's go. That's the one that's working for me. I want one of those, or I want a few of those. Couple of those, because there are investors that invest in more than one. So where is it happening in your world?
So from a rental yield perspective, I mean, the average in the UK now, just in the last 12 months, is about 14% increase. So average across the UK rents have gone up 14%. So, you know, to harbour on Sophie's point, it kind of sucks for the tenants, but you know, the landlords are fairly happy. Obviously, different rental yields in different areas. It's very difficult for me to put my finger and say this is absolutely 100% the best location for anyone to be invested into, because it's really client specific. And I think that's really important to get across to the people that are on the call, is that everyone's goals and ambitions, capital stack, you know, risk tolerance is going to be very, very different. And I think where Sophie's company does extremely well, and obviously we help support that, is to, you know, stage one, sit and listen to what that client needs, what they want, what they have, and then based on that, go and find the property that suits them. It's not just, you know, finding anything we've got available. It's actually listening to them. And then, you know, further afield from that, once we do find them a property that, you know, ticks the box for rental yield, ticks the box for capital growth, and, you know, then between myself, Sophie, in-house lettings and management company, we can make sure that we find a good quality tenant, a professional tenant, or, you know, a sort of a highly educated student that's maybe doing a master's, and then make sure that we can manage that property, manage that process from an end-to-end perspective. So look, anything sort of in the north would be the sort of generic answer. You tend to get better rental yields, and the capital growth is extremely good. But as I said, it is very, very client specific. We don't really enjoy, you know, the sort of investment scene around London. But if a client wants it and they're passionate about it, and these are the reasons, and we agree with it, then okay, we'll go and source it. But yeah, I know that's a little bit of a long-winded answer, but
no,
not
at all.
there.
I think it's a bespoke deal, which I
Correct.
think makes sense. All right,
Yeah.
so another question here. Thanks very much, Sophie. I cannot believe it that we've almost reached the bewitching hour. So I'd like each one of you just to give your final wrap, your final words, and you know, maybe your parting shots. Give somebody a little bit of final advice, you know, to take it forward to invest in the UK. So I'm going to start off with you, Greg. So if you can give us your parting shots, your final thoughts to our audience today.
Final thoughts, Neil, are just do your research. Make sure you're working with a company that has links to good solicitors, good developers that listen to what you need and want. Don't stress too much about FX rates. Remember the reason to why you're actually thinking about moving your money overseas in the first place. And when you find something that that does make sense and ticks all the boxes, just execute. Don't wait around. Obviously, we love supporting Sophie's business, and we're happy to help wherever we can.
Wonderful. Thanks very much for being on the show there, Greg, and those wise words as well. 10 secrets to becoming an expert landlord and master of all property manager with David Beatty. He's the founder of Chorus Property Group, and he's also a property author. To book, you just click on the link below. There should be a link that should pop up in the box there. If not, just go onto the REI website and you can link there. And then the week after, navigating FICA. And of course, Chirag touched on that earlier on. It's not only a South African thing, it's an international thing, and it's an international company called DocFox. They're leader in the space. So you can also earn 1 CPD point. So once again, thank you to our esteemed panel. It's been wonderful having you, Sophie, Greg, Chirag. It's wonderful. And so if you want to see the recordings, I know a lot of people ask, please send the recording. Yes, we will send you the recording. We've got you on the registration list. We'll pass it through to you. If you don't get it by email, just go onto the REI website under events and under education. There's replays, and it's all underneath there. So once again, to our audience, please don't hesitate to reach out to the experts by clicking on the links and or via email. And we wish you all the best on your path to success. To everybody, thank you very much from the team, Sophie and Greg and Chirag. Thank you very much. Having you all. For everybody else, stay safe and successful investing. Until our next webinar at 12 o'clock next week. This is Neil Peterson, our real estate investor, signing out. Thank you all.